Good morning, traders. Before we start, stay until the end because there will be a short multiple choice quiz based on today's analysis. It's a great way to test whether you're actually understanding market structure we go through every day. And if you find these daily gold breakdowns helpful, consider subscribing for consistent XAUUSD analysis. Now let's talk about what happened yesterday. In yesterday's video, we highlighted the 5100 level to be important, a psychological level which we needed to watch. Price did exactly that. Gold traded down and tested the 5100 region. Whenever price reacts around levels we previously mapped, it reinforces why structured analysis matters. Interestingly, while yesterday's session did not leave many fair value gaps on the 1 hour time frame, today has already created a new imbalance along with a clear 4 hour 1 hour void. Another important detail is that the previous day's point of control sits right below that void around 5077, which means the market has strong liquidity and value area just below the current price. So today we're watching for 5100 and 5075 regions very closely. Let's break it down step by step. As usual, the first thing we do is mark the previous day's high and the previous day's low. We are on the daily chart. The previous day low is marked at 5050.9, while the previous day's high is marked at 5195.5. Why are these levels important? Because they represent liquidity pools. Retail stop losses often sit above highs and below lows, and institutional traders know this and often push price towards those areas before making a real move. So before taking any trade today, we want to understand, is the market targeting yesterday's high or is it targeting liquidity below yesterday's low? Until one side is taken with clear displacement, the market is still operating inside its range. Next, we move on to analyzing the daily time frame. Here we check whether any new fair value gaps, price voids or inefficiencies formed. Higher time frame imbalances are extremely important because they represent areas where price moved too quickly and may return to later to rebalance. If price is trading near a daily imbalance, we expect a reaction. If price is moving towards a daily imbalance, that zone can act as a magnet. The daily chart provides the broader context that helps us from overreacting to small intraday moves. As you can see that there is nothing here, the market moved within the range. We now move on to 4 hour. We can see the previously marked 4 hour CB is still holding. The market retested it many times over the past 2 days. So we now refine the analysis using the 4 hour chart. Even though yesterday didn't leave many 1 hour imbalance, we can see a clear 4 hour and 1 hour void forming today. I will mark it here. You can see this void that has formed. We mark it as a 4 hour void. And you can see since yesterday there haven't been any fair value gaps that have formed. A void represents a zone where price moved aggressively without trading much in between. So this is the daily opening gap. The market closed at this level, and when the new 4 hour candle opened to start the current day, it left a void. This is what we mark here. These areas often get revisited later because the market prefers balanced liquidity. So if price retraces into this void, we want to watch how it reacts to it. Does it reject quickly and continue, or does it fill the void and stabilize? That reaction gives us clues about whether momentum is continuing or fading. We now move on to the 1 hour time frame. We now move on to the 1 hour time frame where most intraday liquidity forms. Even though today did not create many fair value gaps on the 1 hour chart, today has already created one. So let us mark the one created yesterday, which the market seems to be holding, which was this. This is a 1 hour sell side imbalance. So a SIBI or a sell side imbalance buy side inefficiency acts as a resistance and pushes the market down. The new imbalance becomes important because fresh inefficiencies often act as short-term magnets for price. We can see it also formed a void at the start of the day on the 1 hour chart. This is the 1 hour void. The new imbalance becomes important because fresh inefficiencies often act as short-term magnets for price. At the same time, the 5100 and 5075 levels are where liquidity may be clustered. This is the level I'm talking about. If price moves towards these levels, we want to watch for liquidity sweeps, rejections, displacement moves. These reactions tell us whether institutions are accumulating or distributing positions. So another BISI we see, this is a buy-side imbalance which can act as a support to push the market up. We can see that today there are opposing liquidities, a fair value gap liquidity and internal range liquidity. It's a 1 hour BISI. So these levels generally tell us which direction the market might move in. That being said, since these are opposing FVGs, we have to wait and see how it reacts to either. We now move on to the previous day's volume profile using a fixed range volume profile. We mark the previous day's volume profile starting at 1800 and we move on until 1600. This is where a trading day ends. We now mark the value area high of the previous day. The point of control. We can also use the 5-minute time frame to refine the levels. So as you can see, I will start at 1800 and this ends at 1600. So the previous day's POC is at 5065 and the previous day's value area low is at this level at 5056. So when we look at volume profile from yesterday's session, the value area high, the point of control and value area low are what we mark. The point of control or the POC represents the price where the most volume of trading happened. In this case, the previous day's POC sits around 5065. So if the price moves down into the void and reacts to the previous day's POC, we can see something very interesting. So also notice that the POC is below the void, so the market could come and retest this level. If price moves down into 5065, it's a natural magnet. This is why it becomes a key liquidity level for us today. When volume levels align with inefficiencies, the probability of a reaction increases. Finally, we mark the psychological levels. Today, the most important levels are 5100, 5065, which is the previous day's POC. The alignment between these levels creates a strong liquidity zone. If price sweeps below 5100 and moves towards the POC area, we want to observe whether the market rejects aggressively, consolidates, or continues lower. Psychological levels often trigger emotional trading, which is exactly where liquidity gets created. So putting everything together, prices already reacted to the 5100 level yesterday. Now the key areas below is between 5075 and 5065, which is between a psychological level and a POC, and the nearby 4-hour 1-hour void. This creates a high interest reaction zone for today. If price reaches this, observe if the market rotates higher or continues lower. The key is not predicting, it's waiting for confirmation and displacement. Avoid entering trades in the middle of ranges. Instead, wait for liquidity sweeps, displacement, retracement, confirmation. This approach keeps you trading with structure rather than with emotion. So these levels which have been mentioned today determine the next move in gold. Trade with patience, trade with structure, and I'll see you in tomorrow's analysis.